Good morning, Predicted Trades family. Hope everybody is doing well. Thanks for tuning in for morning prep. I'm going to start with just a kind of a dialed down view, the 3-minute, just to take a look at our system and ES yesterday. Pre-market, we had that little sell-off that got down near our destination buy zone, right? And then we saw that big old recovery before the market started. That at least told us we need to be patient to any kind of downside, that there would likely be a pop, especially opening right near our open range buy zone. Yesterday we had a nice push up to our open range sell zone, and then rejected back down. Couldn't get back through open to hold, and fell even further, almost making it to our midline. We basically stopped at some of these pre-market consolidation. You know, you could, come on, my toss is freezing. But basically you could draw a little box around this consolidation, project it forward, and that's where we found buyers and came back up. We basically wedged in that open range until the end of the day with a strong pop with a ton of volume. And so not surprising to see that we're having a small gap up. If you look at the overnight session, again, our beast levels provided a great roadmap, right? We were chopping around that open level. We hold open, play it up to that open range sell zone, where we reverse to come back down to open range buy zone, and now we're right back up. So these beast levels every day, every night provide great levels to risk off of and a great roadmap to navigate each chart. Let's go ahead and step back out to our normal prep time frame. And you know, as we wait on that chart to load, if we take a look over here, this is a chart that I track, you know, kind of on the side every day, so that as I'm down on smaller time frames, I still have a view of a larger time frame. Overall, from Thursday up till today, we had Thursday's lows. We had some consolidation from where we kind of closed on Thursday. I created a couple of zones off of that and projected it into yesterday. And it gave a good roadmap as well to say we're running into that rejection zone, a good spot to shorted it down, then started getting those longs right back up. Now we're in this little up channel, and it held on the pre-market low. So basically, as we go into today, excuse me, we are in a 4-hour squeeze. The top of that 4-hour squeeze is this cloud up here. The bottom of that 4-hour squeeze is this cloud down here, which now aligns with that support that we came up from. So overall, the thesis for today is we are trying to push through this resistance, use it as support. So let's see if we can hold above 440 and our trend line from the lows and keep pushing up to 460, 461.25, a key level, and the top of that 4-hour squeeze, which spans up to 44.75. Now, if we reject 44.61 and roll over to lose 44.40, we'll be giving out this uptrend. We'll see sellers step in to take us through pre-market low and back down to yesterday's low and the bottom of the 4-hour squeeze. They could very easily do that today to put everything in a better position to load long into CPI if the reaction's going to be favorable. So be prepared for that. It could also very much be a chop day where we run up into this 41.61, fall back to this zone, and just kind of chop around. Now that this chart is loaded up, let me come on over just to kind of further articulate. Up here we are in a 1 hour and 30-minute squeeze. The bottom of that 30-minute squeeze is 440. If we start to lose 440, 436 where the daily 15 sits, we'll arrive down at the bottom of the 1 hour squeeze near 432. And then should that give out, we fire the 1 hour down into the 4 hour. Our daily 21 has now stepped up to the bottom of our 4 hour. And right near that 44.10, let's say 44.10, is about yesterday's pre-market lows and close enough to the daily 21 right now. So mark your up channel and be prepared if it starts to break down to step into that short right down to this target zone. If we can continue to hold up, then you take the longs up and lock profit at the top of these squeezes. We do have the daily 8 at 44.47. We have the daily 15 at that 44.36. We have POC for July, which, we're only 11 days into July, so it's still establishing POC, point of control, the highest volume node on the market profile. But that POC is at 44.45. So right in between the daily 8 and the daily 15. So a lot of liquidity up here. Let's see if they want to get aggressive to take it down to the 21 and reload at these lows before actually making a move back up. But yeah, let our squeezes be the guide. Play the range until it breaks. What that means is we might get a good push early and run into squeeze tops. And as we start to reject, I'll be stepping into shorts back down. If we get near squeeze bottoms and hold, I'll be locking shorts and going back long. And I'll play that range back and forth until it finally breaks up or finally breaks down. Moving on, NQ. NQ is a little weaker yesterday and did fully interact with its 4 hour squeeze bottom. ES did not quite get down to test its 4 hour squeeze bottom, but at the very least NQ did, and making a push back up to the middle of that 4 hour squeeze, right around 15,200. The bottom of that 4 hour starts at 15,100 and spans, almost down to 15,000. But if we can get above about 15,250, we'll be clearing pre-market high, and you'd want to be playing up to 15,300, 15,336. Where the 4 hour squeeze top sits, and the next key level of 15,400. So right now we're sitting in the middle of a 4 hour squeeze at a lot of intraday moving averages. As we come back over to our main chart, we can see we also have the daily 15 and the daily 8 mixed in with those intraday. So a ton of liquidity at all those moving averages. We could very easily just chop between 15,152 key level and this 15,250. Could be just back and forth in this liquidity pocket going into CPI. If we can clear that 250, 275, we could fire that 1 hour squeeze up into the 4 hour, which spans from 300 up to about 350. If we start to lose the trend line from the lows, just like on ES, and go below that 15,152, then we're likely coming down to 15,100, the daily 21, which sits at 15,040. And in that big psych level of 15,000. So watch that trend line. If we break, we have our targets, but we have a very thick and stacked 4 hour, 2 hour, 1 hour squeeze bottom. So it could be, if we do go down to visit that, it could just be a run into it and a bounce, and run into it and a bounce as they load long into CPI. And it's also worth noting the high rejection points from recent price action. So very much going into CPI with a wedge here, right? So that's your range for today. And, not really expecting a big trend move today with CPI, PPI tomorrow. More so expecting that chop back and forth as they load into position and hedge going into CPI, right? They could be loading long, and then at the highs they are picking up hedges and locking profit, right? So that they're positioned in each direction for the break. Moving on to the ready. Ho. So the Russell got down to a daily squeeze recently, last Thursday, and has now made it almost to the top of that daily squeeze. Well, we are above 1900. We had a great push yesterday to get above 1900 and hold. 1900 is a very key level. And we are nearing our last rejection point near 1919, just call it 1920. So we want to be cognizant of that potential double top that could happen. There will be a lot of resistance around 1920. So keep an eye on ready today. If it were to reject 1920 and quickly roll over to lose 1905, it's going to be your first indication that the indices might give out their trend lines. But if ready can continue to hold above 1905, that pre-market low, which is really 1906, but just rounding to make it easy. If we can stay above that 1905 and keep pushing up to that 1920 and through it, then it could be a quick move up to 1930 and a big key level 1941. We also have the second daily Keltner sitting up at 1941 in the top of that daily squeeze. So if we can break that 1920, that's the target, and it could be a quick move. Or it could just be that we reject, start to fall back, chop around between yesterday's highs and our pre-market highs. Moving on to YM. YM got down to this 34,000, huge keys area. And yesterday had that push back up to the daily 21, held that 34,000, and now we're trying to push higher. YM sold down all the way near, pretty much tapping the daily 50 yesterday pre-market, and near that daily squeeze bottom. So just like we saw on Ready, where it tapped the daily squeeze bottom and then made a push to the top, we want to keep an eye on YM to do the same thing. It basically just has to clear Friday's high and these squeeze tops around 34,250. We can clear that and start to push like through 300. Then it's more and more likely we're going to recover back up to 34,500 and 34,800 at the top of the daily squeeze. The recent high 34,700. So keep an eye on all that. If we were to roll back over and lose pre-market lows and that 34,000, then it will go straight back down to fully engage this daily 50 at 33,800 and that recent low in the daily squeeze bottom. Sometimes we get close enough for a tap and then we're off again. Other times we get this first pop and they come back to fully test and shore up that is a good base and buyers are present before they risk the full breakout. And if we draw, you can draw a less aggressive trend line from highs that's going to cut through here. I'm going to grab this one. Just to show that, getting through that trend line is the full breaking out, which can vacuum back up to these highs. And we are at our daily 21, daily 8, daily 15. So just like the thesis on ES, going into CPI, we should maybe expect some chop. So it could very well be that pre-market lows near 34,060, and our key level 34,000. We have our squeeze tops, and some of these daily moving averages topping out at 34,250. So it could be that we're stuck in that little 200-point range today, bouncing around. Apple had a great push up to that 194.5, got above that third Keltner, and that's where we start to worry about being oversold, and as you can see, has faded back. Got a little bounce at the daily 8, but it rolled over to lose that, and made it down pretty much to the daily 21 yesterday. Daily 21 at 186.8, the lows were near 187, so pretty close. And we're getting a bounce right back up to that daily 8, daily 15. So we've got 3 daily moving averages spanning yesterday's range. We should be prepared that Apple just has an inside day today and engages with those daily moving averages. That daily 50 is way down below. But still, like near the old all-time highs before we started pushing these new all-time highs. So, I'm not going to start speculating that we're going to give out the daily 21 and get a reversion to the 50, but we did see that over on YM. We want to keep a close eye on Apple, right? The daily 8 sits at 190. The daily 21, 187. So we've got a 3-point range here. And depending on which way this 3-point range, which is going to settle into stacked squeezes, depending on which way that breaks, is going to dictate a trip back to the 50 or just pumping off of the daily 21 back up to our third Keltners and back to new all-time highs. Apple has, like 7% weight of the entire S&P. It's huge. It's the biggest weighted thing. So wherever Apple is going, the market's going to follow. Keep an eye on Apple, and that 3-point range is going to be key for the rest of the week and the rest of, your trading career. But that range is going to be important this week. Moving on, AMD. And I guess I could take a quick look at AI because I know a lot of people have been interested in that lately. It's been on a bit of a tear. Let's see, we are getting back above our daily moving averages. We keep peaking higher, but then rolling back, peaking higher, rolling back. Overall, it is looking like buyers keep stepping in at the daily moving averages, and they're trying to take it higher. Let me look at a quick daily on this. There we go. Looks like we've got some gaps that have been filled. Yeah, this big sticking point above us is that 43.9-ish recent high that we've only peaked above for 1 or 2 days. We're approaching that again. If you can break that recent high, what is it? All right, around 44. If you can break that recent high around 44, get that push to this other high around 49, maybe even that 50 psych level. But we are in a 4-hour squeeze here, so don't be surprised if we reject yesterday's highs. If the market is chopping, AI might just stay under 42 and roll back to these daily moving averages. We now have a 4-hour squeeze sitting right around those daily moving averages. So the daily 21 sitting around 37 at the bottom of that 4-hour squeeze. Our resistance and recent high at 42 at the top of the squeeze. If we reject 42 and roll over to lose 40, just call it 40, then you want to play back down to those moving averages and the squeeze bottom. We can hold up above 40 and keep pushing against this squeeze top and get through 42. Then it's the play up to 44.5 for the next Keltner. We've got a 1-day squeeze top at 46. We've got a 2-day squeeze top at 48, right near that recent high. Moving on to AMD. Got down near its daily 50 yesterday and the bottom of the 4-hour squeeze. Basically these 4-hour squeezes, it's like whenever we're reacting or interacting with one end of it, and it's very thick like this, it's basically like let them drop it to it, let it start to settle. Sometimes it's in the squeeze cloud, sometimes it's a little outside. You can see we reached below that squeeze cloud just enough to get that first Keltner to the downside and near that daily 50, which made a little, what is it, like 50-cent range, right? So sell off straight to that, hold, and bounce right back up to your squeeze cloud. Even if you let it get above that squeeze cloud and come back for a test, that is a great entry long. Made it back up to the daily moving averages and back up to this key level 114. Let's see if we can hold above 113, which is the daily 15. We have the daily 15, daily 8, and daily 21 spanning between 113 to 114. We've made it back above that liquidity shelf. So let's see if we can hold above 113 and push on up to 115, 116 at the top of the 4-hour squeeze. We start to lose 113, then you want to target back down to the bottom of that 4-hour squeeze, back down to 112, 111, yesterday's lows near 110. Moving on to Amazon. Had that hard sell earlier, but then what did it do? Just chop around the daily 21. Now we're getting a little gap up. I think a couple of folks were talking about getting the 130 calls yesterday and swinging them. So those will be looking even better today, as Amazon looks like it's trying to push. We have the daily 15 and daily 8 right at around 128.3, 128.7, so right around 128.5. We have this liquidity pocket of the daily 15, daily 8. We could run into that and it hold us back, maybe even come back for partial gap fills. But if we can get through 128.75 and hold it on any pullbacks, then it could be a push to fully recover yesterday's sell back up to 130. And if we can clear 130, then it would be back up to Friday's highs near 131 and squeeze tops near 132. Should we start to roll over, fill the gap, and lose the daily 21, we have yesterday's lows near 126. Should that start to give out, what we would want to target is this daily squeeze bottom down near 124, 123-ish. I'm not doing coin, but coin's been on quite a tear. But it's also ran into third Keltner a couple of times, getting a little extended 4-hour squeeze. Right at that 82, bottom near that 76, so that's your range to watch. Breaking 78.5 will take you down to 76. Moving on to Google. So Google had that very weak day yesterday. One of our members called out shorting Google since it was rejecting the daily 50 to get down to that daily squeeze bottom, and that was a great trade for that member and other members in the room that hit it with him. Google's still hanging out at the bottom of that daily squeeze, and Google can sometimes be a lagger, especially when it's kind of being taken behind the tool shed, right? We are near this recent low, 116. Losing 116 could really drop us down to that 114 level and the bottom of that daily squeeze. As long as we can hold 116 and start to push a little bit over 117, we'd want to play Google off of this daily squeeze bottom and back up to key levels and daily moving averages. The daily 50 at 119, the daily 21 at about 120.5. So let's see if we can hold squeeze bottoms and make our way back up. Meta. Looking a lot different than Google as far as XLC, right? Google's kind of looking weak and at the bottom of its squeeze. And that's a good point to make. Even though Google's looking weak, it's at the bottom of a very thick daily squeeze where we, know from experience that we can find support there. So even though Google's weak, it could easily make a turnaround and all of XLC pushed together. Meta had that little drop yesterday and ran into squeeze bottoms and then made it right back up to the tops and trying to push higher. We are still in a bunch of stacked squeezes, so don't be surprised if we reject a little and come back for some partial gap fill, maybe back to the middle of yesterday's range. And Meta has a lot of headwind with the new threads that was released to, compete with Twitter. I think I saw some blip that, it's the fastest growing social media app because something like 70 or 80 million in the first day joined up or something. I don't know. Either way, let's see if Meta's going to continue to remain strong. We do have the daily one down at 282-ish. But that would be reaching out of our squeeze bottoms. But just like we saw, what was it on NQ, where it reached outside the squeeze bottom it was AMD, I think. Reached outside just enough to tag something. We could see, not saying Meta's going to sell off necessarily, but as that 21 creeps up near these squeeze bottoms, if we do get down there, it wouldn't be surprised for a quick tap of that 21 before heading higher. But when something's holding the daily 8, it just has a lot of bullish sentiment, right? And it's still holding the daily 8. And our stack squeezes are trying to be there for support as well. If we can get going, obvious target, 300, recent high. Past 300, it's up to 306.15 for that third Keltner 305 psych level. Microsoft. Ooh. So Microsoft below the daily 21, 334.5 is kind of a resistance point right now. So even if we saw a pop up there early, if we roll back over and lose some of these pre-market highs near 332.75-ish, we could slip right back down near yesterday's range. We could continue this journey. Let's get our little trend line going here. Boom. Look at that. Perfectly lines up with the daily 21. So we could get a fight up here. It could ultimately roll over and get us down to this daily 50 and the daily squeeze bottom. I only mention all this because it's I would much rather load down here than just that first Keltner down and riding back up. To me, this is a better position long, and so maybe big money is following that same vein. But could very well be that was enough of a dip for Microsoft, kind of near the last bounce point that took us up. So keep an eye, as long as we hold above 330, it could be looking good. And you can play up to 334.5, the daily 21. If we can get through that, 336.5, the daily 8, daily 15. And then past that, 340, 343, and up to the daily squeeze top. If we reject 334, start to roll over and lose pre-market lows 331 and 330 psych level, then we want to be targeting down to 325 where the daily 50 sits at the bottom of that daily squeeze. Netflix. My baby Netflix got up to 450 and then pulled back to that daily 15 near 430, and now we're stuck in this range. We're going to wedge tighter and tighter, stack squeezes stepping up. Consolidation before, profit taking down to the daily 21 or further breakout above 450. This daily squeeze top near 455, key level near 460, but that's where what are you doing, Toss? That's where the third Keltner sits. So overall, could very well be trapped between 445 and 435. These stacked squeezes before a true breakdown to the mean or break up to push higher. NVIDIA. Same thing, stack squeezes, right? We run into some on Friday, they flip short, We get near the bottom yesterday, they flip long. They play this range until it breaks. And the longer they stay in this range, this daily 21 will step up at the bottom, and then we'll just be stuck in a liquidity pocket and consolidation until we break higher or down to something like a daily 50. On the video, come on, Toss. That is way down about 60 points. It's actually past the third Keltner. I think we'd have to see some horrible earnings and bad news and whatnot to get down there at this point. But some sideways consolidation always brings those lagging moving averages up to meet us. So, moving on. QQQ. Like in Q, got down to that 4-hour squeeze bottom yesterday, and now we're going to open kind of up near the middle. What was it? I think I shared the 366 call for today. It was hitting Beast and holding yesterday, even late into the session, and had a great push with that last 10-minute push of the day. You can see the volume over here, not quite the same as ES, right? ES had that huge volume spike. Might have been more ruddy driven. And Q, decent volume spike, but not the biggest of the day. Overall, we got our pre-market lows near 366 and a quarter, pre-market highs 367 and a half. So that's kind of the range that we're stuck in. We've got squeezed tops spanning from about that 367 and a half up to 368 and a quarter. If we can get through that, we still have a 4-hour squeeze up at 369, 370. If we reject this 368 squeeze top and roll back over to lose 366 and a quarter, we'd want to target down to about 365, some of the lows from yesterday, not the low, but those midday lows. Below that 365, we want to target back to yesterday's lows near 364, 363 and a half, where the bottom of the 4-hour squeeze sits. The daily 21 down at 362 and a half-ish, slowly creeping up to meet that squeeze bottom, just like everything else we've been looking at. SPY. SPY, even in this selling, basically just made it back to intraday moving averages and trying to push away from them now. So in a way, we are still very bullishly stacked on these moving averages. I never get too aggressively, we have to recognize our trend. We have been in a bullish trend, and when it starts to break down, I don't get too aggressively short, but I do play the short, right? When we started to break this flag, we went right down to these MAs, and then we started to bounce, and we played our longs back up. But like we saw on Friday, you get to a point, and it just completely engulfs right back to these magnets, these intraday moving averages. And yesterday's cash session did a great job holding up, and now we're pushing away from them, still dragging them back up and still in a bullish pattern. We do have that 4-hour squeeze, the top of which is near 441 and a half up to 442 and a half. So that is kind of our resistance if we do get a push early in the day. If we start to reject that 442 and roll over and lose 440, then we want to play down to pre-market lows, 439. Back to yesterday's lows and those MAs again at 438. Should those give out, it's down to squeeze bottom from 437 down to 436-ish. But if we can hold above 439 pre-market lows and get through that 442, then we'd be playing back up to that, second Keltner at 443 and a half, recent highs 444 and a half. And the top of a daily squeeze near 445 and a half. Tesla. Had this big gap up on delivery numbers, right? And then what do? Sell against it. Let it come back up, sell against it. They are taking profit on that position and bringing it back. 2 daily moving averages. Yesterday we got down to daily 15 and daily 8, and we're trying to hold there. But not the strongest of bounces. Had it to pop back up to like 275. That would have spelled, some stronger buying sentiment off these daily moving averages. So overall, we're sitting at 270. Let's see if overnight lows of 268 can hold at the bottom of the 30-minute squeeze. If we lose 268, then we want to play back down to yesterday's lows near 265. And ultimately back down to this zone at 256.5, 258.8-ish. As a key level where we've seen them, resist, resist, and then use it as a springboard to head higher. And if we get there, we'll also be filling that gap from that delivery numbers gap up, right? We've slowly been filling part of that gap, and yesterday got very close to the highs before the gap. So maybe that was close enough, and they're ready to go higher. Or if we roll over and lose that low, they'll completely fill the gap and get to this key zone near the daily 21. We can hold up, get above 270, you want to play to 275, 280, and recent highs near 285. And finally, VIX. So VIX, jumping around and whatnot, it did get above the daily squeeze and daily 50 and then came back. And at least the last few sessions, we have opened in that squeeze, daily squeeze top, and rejected back to the 21. Yesterday we opened in that squeeze top and slowly rejecting back again. So it might be that if you are looking to short into CPI or short this market or whatever, you might want to wait for VIX to get to that daily 21 again near 14.5. It's kind of like, we gap up to it, hold near it, gap away up, come back and hold it, gap up. If we come back and hold it again, we could see another gap up in VIX, which means more selling for the market and maybe firing these squeezes down. But let's just talk about today, since we are opening near the top of some squeezes. So if we are going to see some quick rejections and partial gap fills, we'll likely see VIX hold near this 14.8 key level, take back off above 15, 15.2, and maybe make it back up to this daily squeeze top at 15.5, 15.75, where the daily 50 sits in the middle of the daily squeeze top. That's if we're going to see selling early and gap filling. But if we're going to have a little gap and go, we'll likely see VIX stay below 15 and fall down to that daily 21 at 14.5. And if we see some gap and goes and start to fire some squeezes to the upside, then we'll likely see VIX lose the daily 21 and fall to the daily 15 at 14. But let's keep in mind the overall thesis that we could be chopping today going into CPI. It could be that we're kind of stuck between 15.25 and 14.5, right? Watch this trend line. It could be getting near here, popping back up, and then VIX just staying in this range, right? So overall, that's it for prep. Thanks for tuning in, folks. Hopefully everybody found this helpful. Ooh, I see that some of you guys hit the like on the video, so I definitely appreciate that. And we'll see everybody in the chat today.